Hello, everybody. My name is Troy. I'm a senior account manager with AvaTrade. We'll get started with the fundamental analysis webinar at this time. Before we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, I've got enough responses. Thank you. Looks like we're up and running fine. If anyone runs into any issues as we go along, please let me know. A couple big stories driving the movements on the charts today and still. So fundamentally, it's been a strong fundamental day to help you determine direction of preference. We'll take a look at that soon with a quick review of the fundamentals, and then we'll look at some potential moves on the charts that relate to them. Keep in mind, as always, no one trade is guaranteed to profit. All investments have risk, and so the same is true with FX trading, spread betting, options trading, CFD trading, etc. With that said, certainly there's a potential for nice profits with each trade as well, which is obviously why we're all here. So going about managing your risk in a way that makes sense for your account, for your trading preference, for your balance, it's something you should do to protect yourself. If you don't have a high tolerance for risk, then you probably want to manage the risk in some way. And we go over some ideas in that regard with stop losses, hedge trading. There's a special tool called AvaProtect that's found on our AvaGo app. So the AvaGo app will allow you to trade on the MT4 accounts, MT5 accounts, and has some special tools that you don't see on those platforms, but you can use when you trade on those accounts through the AvaGo app. And one of those tools is the AvaProtect feature, which allows you to protect against losses for defined time periods. It's a really unique tool and specific to that app. So it's something you might get on your mobile devices. And if we have time, we'll take a quick look at it as well. Now, you can find the full risk disclosure statement and warning and everything on our website. You can check it out if you'd like. Keep in mind as we go along that what we cover is meant to be from an educational perspective and not to be taken as financial advisement. The idea is to add some tools to your tool belt, so to speak, as we look at different ideas and concepts about trading strategies and where to find information, etc. And hopefully that helps you improve upon the bottom line in terms of your P&L. Now, when it comes to fundamental analysis, there are two main types of fundamental analysis. One would be regular economic events that we can look at, and we'll look at some that came in today, and certainly they're playing a role with the way the market's moving. What's nice about these regular economic events is we know what the topic will be. We know exactly when the announcement will be, day, time, down to the minute. The other type of fundamental news is what we might refer to as extraordinary economic news. And this type of economic event or news that's what we call extraordinary, we don't know when it will be. We don't know what the topic will be. Lately, we might be able to predict a little bit what the topic might be, like something about US and China bickering back and forth, something about the virus outbreak getting worse or getting better. We can anticipate at times what this breaking extraordinary news might potentially be about, but we don't know for sure what the headline will be, positive, negative, when exactly the timing might be. And so preparing for those types of fundamental stories or headlines, you also can do. So you can prepare for the known and you can prepare for the unknown. And we go through some ideas of how to do that both with market moves and also pending orders. So it's very important to take into account both types of fundamental news. Now, as we go along, please ask questions, contribute ideas, suggest assets if you wish that you might want to look at. There's some stocks that we definitely need to look at, very important, related to the TikTok situation. If you haven't heard about that, we'll look at the headlines, and it's affecting Microsoft and some other stocks, and we'll look at some other headlines that have been in the news as well to drive us towards maybe some particular assets. So First headline you see, it's the big driving story today. Microsoft and Apple lift Wall Street. Okay, for different reasons, but they both have lifted Wall Street up. And you know how that goes. It's a global economy, so it's not just Wall Street. It's also European indices. It's the UK. It's the Nikkei. It's a global economy anymore. So it's having this positive momentum on the markets globally today. And so as we look and we see, okay, what's going on with Microsoft? Well, I don't know if anyone is paying attention, but TikTok is has created, it's a mobile app or service that up until now and still, but maybe not for long, owned by the Chinese. And with what's been going on with US and China, and the US doesn't trust China and closing one of their embassies in the US, accusing them of spying and stealing intellectual property. And I don't think the US is the only country accusing China of that. There's been a lot of tension. And so now the accusations are that TikTok, because it's China-based, China has access to whatever they demand from companies that are based in China. This is the accusation, that the Chinese government then has access to everybody's personal data that's signed up and has an account with TikTok. This is the fear. And so this has created a situation where Trump first said he was just going to ban it and make it illegal in the US to have that app. Then now they're saying, okay, well, as long as they sell it to a US company, and Microsoft has come into the mix as maybe the one who could buy and get ownership of this app. Okay, and so with that anticipation of potentially happening, we'll see what Microsoft did. It's amazing what they did on the chart today, and they're helping to lift the rest of the markets. And so that's one storyline, is what's going on with Microsoft. With Apple, they just had good numbers. Okay, for a second straight day, there's been positive momentum after their stunning quarterly results. Okay, and also they're talking about splitting their stock. So pay attention to that, by the way. I don't know if you understand about stock mergers or stock splits, but if you take a stock and split every one stock into 4 stocks, then each individual stock is worth less. And so you could see a huge drop on the chart in terms of the value of an individual share. It doesn't mean if you're in a sell position, you make that big profit. That's not an actual market move. That's a stock split. So keep that in mind. If in the coming days you see a huge plunge in Apple stock price, it doesn't mean something went wrong with Apple. If they split their stock, that's one of the extraordinary events that's listed in the terms and conditions with all brokers, that if an unexpected stock split or something like that, or stock merger, causes a change in price that's not really market related, it's just related to the number of shares existing changing, then that's not actual market movement. So just keep that in mind. But also keep in mind, there's a lot of positive momentum with Apple. And by the way, if you were buying on Apple and the price drops because of the split, that doesn't work against your position either. Keep that in mind. It goes both ways. So both Apple and Microsoft, very, very bullish today for different reasons. One, because of maybe buying out or taking over the ownership of that app in terms of Microsoft, and for Apple because of stunning quarterly results, as they said. So this being earnings season, they're not the only company that's had good numbers come in tech-wise. And by the way, if we look here on investing.com, we do this a lot. Everything's green. Everything. Even the volatility, it's up, not a lot, it's up 1%. Makes sense. Maybe there could be some volatility with the US-China situation, maybe a little bit of fear still in the market, but overall looks like positive momentum. The futures are green. When the market opened in the US, it went green. So we see futures green. We see the regular indices, the non-futures also green. Kind of a mixed bag with the volatility. Little bit of increased volatility, but not so much. Not all is great, but there are some good numbers coming in. Construction spending falls to 1-year low in June. Okay, those were bad numbers. Construction spending down. But if we look at the economic calendar, we see that out of the US, manufacturing activity is up, higher than expected, above 54 even. Above 50 shows expansion. The expectation was 53 point something, and this is a high level announcement, 3 stars. It's even higher than the good numbers they were expecting. So we continue to get some mixed numbers in terms of economic growth. Construction spending down in the US, manufacturing PMI up more than expected. So that's kind of a mixed bag on those announcements, but the good news for Apple and Microsoft has really spurred things on. Now, one thing I would notice here, if we look at the European Union, a lot of good numbers came in. German manufacturing PMI showing expansion, French manufacturing PMI showing larger expansion than expected, Italian manufacturing PMI also larger expansion than expected. So European Union numbers looking good. And what about the GBP out of the UK? PMI slightly lower than expected. Okay, so if you were going to pick a currency pairing based on just this fundamental news right here, if you paired Euro GBP, what way might you lean? If we're using the fundamental news as a guide, Euro, European Union, 3 different countries, better than expected PMI. And then we look at Great Britain, worse than expected, right? So maybe it's obvious what you might want to do with Euro GBP, fundamentally speaking. Let's see. Someone's asking Euro USD has a downside risk, maybe because the USD is good to buy now as a safe haven, not necessarily because the economy is doing good. Gina, I would agree. The USD has been acting as a safe haven through this pandemic because when the fear was really, really high during the beginning of the pandemic, gold actually dropped because people were liquidating the traditional safe havens because they wanted cash in hand for what was thought to be maybe a total collapse of economic systems. And so folks were cashing in their gold and getting cash in hand, and the currency that people trust largely around the world has been the USD. So yeah, the USD has been strengthening during times of fear of late, even if the numbers out of the US have been mixed. I would agree with you. Charlie, you're saying Euro GBP buy. Yeah, the Euro numbers look better than the numbers out of Great Britain here. Okay, across the board, the Euro numbers were pretty good. Now, out of Great Britain, they weren't horrible. They're showing expansion, just not as much expansion as expected. Okay, so that's the fundamental situation, basically. Some mixed economic reports, and the big driving news is this Microsoft Apple combination of good news for those 2 really large tech companies. Okay, so let's take a look on the charts. We'll look at my demo and see what the live movements are doing. Here's Euro GBP, by the way. If we look at 30-minute candles, we can see today the Euro already climbed up here. Resistance down, resistance down. And we've got support down here. Support, 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 support. The odds in maybe some of your minds that the Euro would break this support and be pulled down by the pound to break this support on a day when there were so many good economic announcements for the Euro, maybe you say that's maybe not likely in your mind. If you think the fundamental news makes this support level look better for the Euro GBP, that you think the pound can't pull the Euro through this support level, then it would make sense if you were buying on this movement that your stop loss would be below this support level and your take profit might be at this resistance level that already showed twice it could reach today with the good news that came out of the European Union on those announcements. So the question is, would you get in now if you wanted to buy on Euro GBP, or should you wait to see if it tests this support level again? if you wanted to wait until potentially you get a better entry point to buy on the EURGBP closer to this support level, what kind of pending order would we put to buy from maybe right about here, just above that support level? What kind of pending order would buy from down there? Yeah, buy limit. Good. You guys are all on. So let me show how we do that. EURGBP, pending order, buy limit. This is fundamentally driven. This decision is fundamentally driven, but with a technical entry point that maybe is more picky. We're not just going to buy right now necessarily. You maybe pick your spot. So I drew just above that support, maybe at 89.86, 0.8986. Okay. Stop loss just below there, maybe at 89.76. 10 pips. 0.8976 and place. Okay, there we go. So now I've got my pending order, and if I get rid of or move this line that I drew, I put my horizontal line exactly there. I just moved my entry point down a hair, just so you can see it. If you wanted that higher entry point to make sure you don't miss a bounce, it's okay. I just drug this down a little, and what I could do is get rid of this horizontal line I drew, which was my suggested entry point for this simulation. And so let me delete the red line. And now I can move my entry point where maybe I prefer and still see the green line. There. So let's say I'm entering there, and I want my stop loss maybe below these wicks, right? You see the wicks, 1, 2, 3, 4, 5. That's the support level. So maybe I want my stop loss just a little lower. Oops. Oh, let me look at the bigger view. That's my support level. I already have it lower. You see my stop loss is here, the red dotted line. I apologize. I thought the red line was in the way of my stop loss as well. It isn't. So here's my support level line at the bottom of the wicks. And it makes sense then to have your stop loss just beyond that, so that it has to break the support before you give up on your buy. Okay, that's the idea, technically speaking. If you're buying from just above a support level because you think it should not break and go below the support level, then you put your stop loss below the support level. So if it does break it, you admit that, hey, maybe I was wrong, take a small loss. It's one way to go about things. And this is an example of a scalping type move, where your stop loss is just a small distance beyond that level that you think it shouldn't break. And many times when you use the fundamental news on your side, that can work very well. You many times get really good bounces off support levels without it testing and breaking through first. Okay, so we've got our potential entry point here. We've got our stop loss below that support. If it bounces, where might we take profit? Just before the resistance if you're scalping, to take a quick profit. So 0.909 maybe. So let me put my take profit, which I didn't do yet. 0.909. Modify. Okay, so now, oh, I actually put the wrong the wrong price. I was reading it wrong. 0.9. Let me slide it down. Here we go. I wanted to put it at the top of this resistance. I was looking at the wrong one. So there. So just above the first resistance. And so my potential profit at a take profit of 0.9012 basically, okay? I mistyped it the first time, but we've got it in the right place now. And that's the nice thing about the MT4. You can slide your stop loss and take profit around to line it up where you meant to, in case you mistyped the stop loss or the take profit, like I did there on the take profit. So I've got it at 0.9012 basically for my take profit. So you say, okay, what's my risk reward? my reward is about twice the distance, my potential reward from the entry point. If it hits my entry point, my potential profit is about twice the potential profit compared to my risk to my stop loss. Okay, so stop loss is, if we say X distance away, my take profit is about 2X distance, almost double the distance or approximately double the distance. So that's a nice little setup, going with the fundamental news on your side in this case, if it hits the price. Zolani, the term scalping is kind of a slang term. Basically what it means is trying to get in and out quick with small movements, not necessarily small profits. Okay, you could have a sizable trade, and this small movement that's only 10 pips or 15 pips or whatever the distance is that you're hoping to take a quick profit, that distance can represent whatever size profit you want based on the trade size that you take. Obviously, you have to manage the risk side of things as well. But if your stop loss is a short distance away, you could take a pretty sizable trade without having to risk much and have a pretty large potential profit, because the scalp gets in at an opportunistic spot just above a support level in this case. And so you don't have to risk much to get beyond the support to your stop loss, and the potential profit's like double in this example of what you're risking. And you know, you only need to profit, what, 1% on your account a day anyways to have a nice monthly return. If you average 1% profit a day, that's 20% a month or so, approximately 20 trading days in a month. At that rate, you'd more than double your account in 6 months. Who wouldn't take that kind of return long term? So you don't have to go after these huge movements, and you really don't have to go after huge percent risk either, because small percent gains, if they're consistent, if you could win 2 out of 3 moves like this each day, that's enough for like a 20% gain on your account. If you're gaining and risking 1%, and in this example, you could risk 0.5% with a potential profit of 1%. And if you just win 2 out of 3 a day, that's a nice return. Even 1 out of 2 is a profit if you're risking 0.5% and gaining 1%, or 2 out of 4 gains you 1% a day, even just a 50% success rate. So this type of setup, strategically speaking, makes sense from a risk management perspective many times, depending on your preferences. And fundamentally speaking, we're hoping to catch a nice low point here right above a support level on an asset that we think more likely than not should go up, right? In this example, hopefully it doesn't go up before it hits our entry price. Okay, so let's let this ride out. Let's take a look at some other assets maybe. If we look at some of the stocks, and maybe we look at the FTSE, okay? What has the FTSE done today? Up like a rocket, right? Up, 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 up all day long. It just pulled back some. And if we go to the 5-minute candles, we see it pulled back. And we see here, this was a spot where it hesitated. It had the big rise earlier today. It created some resistance, and then broke through. And now it's trying to come back down towards this little shelf, we might call it, this little resistance point that was here before it broke through. So let's say you want to buy in the FTSE, and you say, okay, I'm going to buy, market buy. My stop loss could be just below this little hesitation spot from earlier, resistance, breakthrough candle, and typically wherever that breakthrough is, an old resistance, that could be support. So you might say, okay, I'll take a shot at a market move on this one because of the setup and the direction of the momentum today. Momentum is obviously up. Look at the climb on these 5-minute candles, up, 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 up for hours and hours today. We see that it pulled back a bit, maybe giving you an opportunistic entry point if you're wanting to go with the fundamental momentum. Okay, you don't have to. If you think it'll keep pulling back, then by all means you can trade the other direction. And technically speaking, you could just put a sell stop below this little shelf, and if it breaks below it, then maybe something bad just happened. So you could have a pending sell stop here with an entry point below this little shelf, this little resistance that broke through here. a sell stop here, and at the same time do the market buy that I am simulating here. So if you're in on a market buy, your stop loss would maybe be, if you're just risking a small amount, below this little support level right here, this little breakthrough from a little while back. So let's say I put my stop loss at 59.50. Okay, fine. So I go here, I say modify stop loss 59.50. Okay, I could program a take profit if I want. If I'm scalping, just right up here might work. 6,000, right up at this resistance level that it already reached twice today. Hit and dropped, hit and dropped. Now it looks like it might try and hit it again. So if I put my take profit right up at 6,000, that could be a spot that it could likely hit today. So let me put take profit 6,000, and there we are. So my potential profit and my risk are about equal in this case. I might even be risking slightly more than I might make. In this case, it's almost an equal risk and reward. And maybe I'm willing to do that because of the momentum, because I see a momentum move. So, and by the way, those of you, Zolani, when you said scalping, what is it? You could close your trade now and take that small profit, right? You go with the momentum that you know might go short term, boom, close it, took the profit. In this case, I'll just be patient and see if it'll test that resistance up there again. Okay. Swing trading is waiting for typically longer changes in the direction of the market. Zolani. Okay. So swing trading, typically that term is referring to maybe some longer term type moves where the market changes direction, where it's swinging from one direction to another. It's one way of thinking about it. Okay, so all right. And what did I say? If it breaks the support here and comes down here, maybe that's a sign that the news changed. Remember, I said there's two types of fundamental news. The news you already know, which we looked at. We looked at the nice reports, some economic reports out of the European Union, out of the US. We saw some good headlines and momentum with big companies like Microsoft and Apple. And so we're trading with the direction that we already know, the fundamental news, and then we can back things up. There's no reason why I can't say also, what if the other type of fundamental news hits? That extraordinary news. What if something happens that's really negative and completely turns the market the other way? Well, then I could have a pending order in the other direction. I could say pending order, sell stop would sell from a lower point. If this comes down, breaks this support and hits my stop loss, then maybe I say I want to sell for the same reason I would close my buy. Maybe that's the same reason then at that point I would want to sell, because it broke the support. There must have been a change in momentum. So then I would say at price, 59.50, sell, and my stop loss would be if it came back above that level then, back above that support, at maybe 59.70. And you could pick whatever spot you want for your take profit, right? So there, now I have a backup sell stop in case my buy position goes bad. It'll trigger a sell position if it breaks that support level. Now you could lose both, but each of them are measured risks and at strategic locations that more likely than not are in the direction of the momentum of the fundamental news. Okay, so scalpers might say, oh, I might close now, take my small profit. If you had a 10 lot position, that could already be a huge profit if you had a large enough balance to do that. And if your stop loss was close enough, you don't have to risk that much with a large position. You can take a large position, a quick short movement and close and get a nice profit. Okay. Like I said, I think there's a good chance this could rise to this resistance level up here with the momentum that exists today. So I'll just let it run. Okay. Oh, by the way, I could show an example. Partial close. What if it's halfway up and I say, okay, I want to bank some of this profit. Okay, fine. So right click over the trade, go to modify or delete, switch from modify to market execution. If I change my trade size, 0.05, let's say, okay, that's how much it'll close. Whatever I change it to, the volume, now I click close that part of it. Okay, fine. Now I just took 75 cents profit and the rest is still moving, right? Obviously, in the bigger picture with a balance like I have in my demo, I wouldn't be closing it with 75 cents profit. I might have a much larger position, and that might have been 750 profit that I just took. Okay, so just some examples of how to take profit, reduce risk as it goes further in the correct direction, then it's more and more likely it might pull back. So those are some concepts for pocketing profit at different levels towards your ultimate take profit. Okay. All right, so let's take a look at maybe some other assets. Dow Jones 30, same thing, right? 5-minute candles. What happened today on the 5-minute candles? Up like a rocket. Okay. And by the way, a simple breakthrough strategy, you could have been trading on this all day. And what I mean by breakthrough strategy, here's a resistance level. Resistance, resistance. If you had simply put a buy stop above that resistance, when it broke that resistance right here, you'd have been in on a profit. Once it started going sideways, because you see the momentum was green on the futures, green when the market opened, at any of these levels when it started going sideways, if you said, okay, here's resistance again. If it breaks through, I'll do another buy stop. If it breaks through this resistance level that formed, buy stop again. It broke through, you get in on another buy, and up it went. Okay, so there were multiple levels today that you could have been trading a breakthrough strategy in the direction of momentum. How do you determine momentum? In about 5 seconds, you can see it right here. Futures are green. Okay, when the market opened, it was green. This is usually a sign that there's positive momentum on the markets. Okay. All right. So we see upward movement on the Dow Jones. It does look like it's trying to pull back a little right now. So again, you could put some buy limits, meaning if this pulls back, say to this support level down here, support, this might be a spot to have a buy limit. If you believe the fundamental news still will cause the Dow Jones to bounce, the NASDAQ, and we could look at the Nikkei and see that there are potential pending orders that you could put, in this case, buy limits, that if it pulls back down to that first support level, maybe that's a spot you'd want to enter in the direction of the fundamental news. And we see the NASDAQ, same thing. It's kind of capped itself with resistance, 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 resistance. If you believe in the positive momentum, you could either have a buy stop up here. If it breaks the resistance, you're in on a buy, or a buy limit if it comes back down here, which many people are more comfortable with, trying to buy from a lower point instead of a higher point, but it can work both ways. So if this pulls back down here, this was the old resistance, breakthrough, and this becomes support in this area. And if you were buying off the support here with a buy limit, could program the buy limit now from somewhere down here. Your stop loss could be somewhere below that whole resistance / support area without having to risk much to try and get in from a better point on the momentum that's been occurring today. At some point, the momentum can change, and that's why you limit your risk just in case. This looks like it wants to push back down to the support before maybe continuing on. Okay. We got to a point where the excitement has died a bit and there are some pullbacks occurring. All right, so some ideas for pending orders. Just above these support levels down here that were already broken once today. So 11,008, if I want to put a buy limit, pending order, buy limit, buys from a lower point, just above 11,000 would get me in just above that support. Okay, there's the green dotted line. That's my entry point. If it gets to that point, I'm in. My stop loss, I could program somewhere down here. I didn't enter it in yet, but it might make sense to do that, to have a stop loss someplace down there. Okay, just an example of something you could set up. Get rid of some of these. We'll let that one run out. I'm not deleting them because they're bad. I just want to clear the clutter. You certainly could go with those pending order examples. Let's look at maybe the Nikkei. Let's switch continents. Doesn't that look exactly like the NASDAQ? Remember I said the economy is global? So this excitement about Apple and Microsoft carried right over to the Nikkei here. And it formed resistance, resistance, resistance. Looks like it's trying to pull back a bit. Again, support level here. Support, support. So a pending buy limit from this support level. Entry point somewhere here could make sense. And then also back it up maybe with a sell stop in case it breaks that support. Wherever your stop loss is on this buy, you could have a pending sell stop to open. If it breaks the support and hits your stop loss on the buy, then you're in on a sell potentially, taking profit at the next support level down, like a staircase. If it breaks that support level, then you get out of the buy and you get in on a sell to the next support level to take profit. Okay? Because look, once it broke that resistance, it went flying up. If it breaks the support, it likely could go flying down, right? So in this case, you could sandwich things. You could put a buy stop up here in case it continues to climb. You could put a buy limit in case it pulls back down to the support. And if it breaks it, you've got a sell stop in the opposite direction. Knowing that the current momentum is up, so you're buying first with a breakthrough or from just above the support, going with the fundamental news. And if something changes enough to break this support level, then who knows what kind of extraordinary news might have come along, but then you've got yourself ready with a pending sell stop as well from down here. Okay. And I did not mean to add the channel. I meant to add another line. There we are. Okay. So really nice potential setups here with these indices. Now, I promised we'd look at Microsoft. Let's have a look. And Apple. I think I passed them up. Here we are. Here's Apple. Okay, you see it gapped up. Wow, that's an opportunity. I'm glad we looked at it just now. So here's the top of the gap. This is where the market opened today. Okay, the market opened here. These gaps can be really great to trade many times. So the top of this gap is your support level. Okay, technically speaking, whatever caused this to gap up would have to change to cause it to gap back down, to break into the gap and retrace. So right now, the news hasn't changed. Still positive momentum for Apple. So if you're going to buy on Apple, let's just simulate one here. If I'm going to buy on Apple, okay, I'm in on a buy. My stop loss then, the top of this gap should act as support unless something changes with this momentum drastically. So if I put my stop loss just into this gap, let's say 429.50, then what I'm saying is it has to change. Whatever caused it to gap up would have to change for me to give up on this. So modify 429.50. Okay, so you see I strategically placed my stop loss that the only way I give up is if it breaks this support and drops into the gap. Then I'm out. Then I say, okay, it might retrace the entire gap then. Now I give up. Now you might say, well, I don't like that entry point. I would rather enter from right above that support line, right above where it opened today, because that could be where it's trying to retrace back to. Many times that happens. So, you know, you take a trade size, and because I have a large demo balance here, one lot is not a big deal for trade size. And so I might then also say if it retraces back to this support level, I'll re-enter at a better price. So let's say 431.50 if it reaches, and it very easily could return there. So I might say, okay, I'll also get ready with a pending buy limit from 431.50, and I'll have the same stop loss down here at 431.50 entry, 429.50 stop loss. As an example. Okay, so now I'm in on a market move in case it runs back up. And by the way, if you're thinking where would you take profit, the first resistance level really is here, the high point that it reached today. So if it returns near that high, that might be somewhere where you might program a take profit. So if I go to this market move and I say, okay, let me put a take profit on here. Whoops. Take profit. And if it's going to be right up there, it'd be like 444 even. Okay, so now my take profit's up here just below the day's high. My potential profit being greater than what I'm risking, even with the entry above the support level. Now, if I wanted to take that same trade size and risk less, then I would have been more patient. I would have only put the pending order and waited to see if it was going to get near my support level where it gapped open today, being the support level. If that was the spot I wanted to enter only, then I would be risking less, right? But I also can enter now and more later if that's part of my strategy to make sure I don't miss a return back to the day's high, but also re-enter with more exposure if it gets to a better price for buying. Okay, so some different ways you could do it. Some might prefer not to take that market move and just wait to see if it'll get near that support level that it looks like it's trying to retrace back to. Okay, there is a little bit of a smaller support level here. Support. So it looks like it's trying to break this little support level. If it does, it's likely headed to the open price, which then it will trigger my second trade. Okay, so a couple different ways you could handle these stocks. Now, we also can take a look at Microsoft. And by the way, if you wanted to sell on Apple right now, it could make sense if you think it's going to push down to that open price today. But understand, then you're going against the fundamental news. That's a purely technical move. And since today we're talking about fundamentals, we're kind of erring in the direction of the fundamental news, with examples of getting in more aggressively with a market move like I just did, or getting in more patient with a pending order from a more preferred entry point. And also with the idea you can do both. Doesn't have to be just one or the other. You can diversify with your entry points and just half the trade size. Do half from one location, half if it goes to a better location, that sort of thing. Okay, so let's look at Microsoft then. And I think we'll call it quits this evening, so that you all have time to go trade. You see the gap on Microsoft, just like Apple, gapped up, okay? So here's the top of the gap here. That's the major support level. If you put a buy limit from down here, that's one option, a buy limit from the support. The support being the top of the gap, the opening price today. The other option is, if you're wanting to buy, to do a market move and put your stop loss down below there anyways. Now that then is a larger exposure, right? That's a more patient move to say, okay, I don't care if it pushes down more, I'll buy now. Some don't prefer to do that. And in actuality, you might sell on this right now, thinking that this is going to test the open price before it rises more. That's a possibility as well, because that's what Apple's doing right now. It's been dropping towards the support level, being the open price from earlier today. This looks like it's trying to do the same thing potentially. So, you know, maybe you diversify here and you say, okay, I'm buying early on Apple, and with Microsoft, I won't buy unless it comes down to this support level. So then maybe we do only a pending order with Microsoft, going in the direction of the fundamental news. In this example, pending order, buy limit from somewhere near this support, which is close to the opening price. So 211.55, let's say. 211.55, stop loss below the gap, 210, let's say, or somewhere thereabouts, gets you below the open price today. And your take profit could be back up near the high at 214.5. just an example. None of these simulations are meant to be me telling you these are the exact trades you should take. But now we're prepared with a pending order on Apple, just in case it drops towards the open price today, going in the direction of the fundamental news with a buy limit pending order. And if the market just starts climbing now, well, then we'll likely profit on Apple because we did a market move as well. Okay, just some ideas of being aggressive. I took a market move. Being patient. I have a couple pending orders, and all of them in the direction of the expected fundamental news being positive momentum on the market. All of them with limited risk and nice potential profit, set up in a way that I don't even have to be right 50% of the time to profit in many of these cases. Okay, and also backing up in case the market completely changes, we've got some sell stops on some of these indices and stocks that can open in the opposite direction in case that other type of fundamental news hits, the unexpected type. Backing ourselves up with, you could put a sell stop here. If the movement re-enters this gap, then it could likely fill the entire gap. So you could have a sell stop right down here. If this gap gets re-entered, it could fill the entire gap all the way down. So you could also prepare a sell stop down here. And if everything swings the other way because some headline breaks that is really bad news for the markets, then maybe at 209.50, you're ready to enter on a sell. Another pending order, sell stop, 209.5, stop loss back up the other direction at 210.7 maybe. And there we are. So now I'm prepared in case there's a complete market reversal. I'm also going to get in on a sell because I don't know what might happen while I'm eating dinner or sleeping. The opposite news could break. And then the market opens tomorrow and we get downward momentum. And now you're ready for it. You got a pending order waiting for the unexpected news story that could hit. And in the meantime, this is trying to climb. Okay, which is why we took an early move on Apple in case it just keeps climbing. We're in, but with limited risk on that as well. Okay. All right. Any last questions before we end things? Yeah, exactly. We're integrating fundamental news with technical indicators or technical entry points. Exactly. And you could add in some actual indicators under the chart as well. We could add, Fibonacci levels. We could add Bollinger Bands, whatever indicator you like to use to help you out with your entry points and exit points. All right, everybody. Thank you for attending. Thank you for the participation with input and questions and suggestions as well. It's really helpful for everybody. Good luck with your trading. I think you'll have a lot of opportunities through the rest of the evening and into the night. Okay, bye for now.